You're outperforming pretty much every money manager who's ever lived then. Stan Druckenmiller is the most successful trader and investor ever by returns. In the past 30 years, he's compounded his firm's results at an average of 30% year on year. So 30% annualized every year. He has grown his the fund phase. He's never had a down year, and he's only had 2 quarters, I believe, 2 or 3 quarters in that entire time, which were down out of 30 years. So out of 120 quarters, he's only ever had 2, I think, maybe 3 that were down. Never had a down year. And he makes 30% per year. And you're coming in arbitrarily trying to make 20% a month. I've seen people saying that I only need to do 50% a month. Yeah, I was just like, it baffles my fucking, my brain. I can't deal with this kind of shit. But because the problem is, people see the returns in crypto and think that that's achievable. It's not. Now, of course, it's achievable to get insane returns in crypto, but what nobody seems to talk about is that if Solana goes from $2 to $200, that's 100x, but that's not 100x because nobody bought it at 2 and sold at 200. When I say nobody, of course, I mean general. Of course, somebody did. But whenever you see people say, "Oh, even Bitcoin's up 64,000% in the last 7 years," you're like, yeah, great, but nobody bought it that day and then sold it today. It's all unrealized gains or realized losses, of course, because it can go the other way. So focus on what your actual equity curve looks like, which we'll cover as well. Focus on what it actually looks like, what your portfolio balance is growing by, and then we'll see. But yeah, like rules. Part number 2. Your trading plan must include rules. Now, it sounds simple, and in practice, it's a bit more difficult. Like, rules are very simple. Like I said, let's say we took that example from before. Rule is if Bitcoin crosses 30 on the 1 hour RSI and it is on a Monday or a Tuesday, then I go long. Stop loss goes below the market structure low. Target is above the next market structure high. That's it. Done. Rules for your system, done. All you need to do is monitor, set alerts, and wait for that to ping. Enter the trade. Sit and wait for it to reach completion. Either we're getting stopped out or getting take profit. And that is it. That's it. Done. Rules for your system. Doesn't have to be complicated. Your trading plan must also include which assets you trade. Very important. Most of you know that I only trade Bitcoin when I'm scalping. Unless in very specific circumstances I have a trading plan which allows me to trade another asset. But by and large, for scalping, I trade Bitcoin. Now, I might change that in future if I feel that my edge is better served elsewhere. And that doesn't mean that you only have to trade Bitcoin or that you only have to trade one asset. You can trade multiple assets. I used to trade the S&P, the ES Mini, the E Mini, sorry. I used to trade that. I used to trade multiple coins. I used to trade ETH a lot more than I do now. I used to trade Solana a bit more than I do now. So have your plan and define it. And that helps you too. It helps you to not chase, not FOMO, not get distracted, because you will always do better. Always, always, always. You will always do better by knowing one thing inside out than you will by knowing 5 things at a surface shallow level. There's a term I use, inch wide, mile deep, and that is something I actually heard in a previous career well before trading, but it applies to learning any skill. If you want to master something, you must focus an inch wide and a mile deep. Right? That means you have a narrow focus, but you go super, super, super in depth. So if you just knew Bitcoin, if you knew every tick on the 1 minute chart of Bitcoin every day, if you watched them all, you'd be a much better trader than if you watched a couple hours of FTT and a couple hours of Solana and a couple hours of ETH. All right. So also the time frame you trade on, very important. If you're scalping, are you a scalper on the 5 minute? Are you a scalper on the 1 minute? Are you a scalper on a 3 minute? You know, whatever. You need to know these things because everyone's different. I personally like the 1, 5, and 15 for scalping. Some people like 3 minute charts. Some people only use the 1 minute. Some people use the 30-second. Some people don't even use time-based charts at all. Tick charts and Renko charts and things. Whatever. But have one and stick to it. Do not be loading up the 30-minute chart if you're a 1 and 5 minute trader. Get comfortable. Like, a lot of trading is about being comfortable with your system and being used to it. So just get comfortable with the fact that you're using 1s and 5s and 15s or whatever. Especially when you get to the granular level. When you get to that 1 minute level, like, you need to watch that 1 minute chart for a long time before it starts to not affect you. All right, because the 1 minute chart is so fast moving that it's easy to look at it and think 1 minute you're bearish, 1 minute you're bullish, 1 minute you think it's going to 100k, the next minute you think it's going to 0. And after a while you get conditioned to it, you know. And now I look at a 1 minute chart and I feel nothing. And that's where you should get to. You should get to a point where the candlesticks moving doesn't make, you know, doesn't arouse an emotional response from you. So, 2 ways of doing it is, 1, avoid the 1 minute chart altogether. Not great for scalping, I would say. You can scalp the 5 minute chart. A lot of people do. Scalping the 5 minute chart is doable, it's profitable, but to be the best scalper you can be, I believe you need to go to the lowest time frame as possible. Within reason. 15-second charts and stuff, they're a bit overkill. 1 minute's the sweet spot. Reason being is that every candle above that is built from a 1 minute. Right? So if you're trying to scalp, if you're trying to get an edge over the market, if you're trying to make a decision faster than somebody else to get in or out, doesn't it help that you can see what's happening on a 1 minute whenever they have to wait for a 5 minute? You can see 5 times as much data as they can in the same period. Because the longer you trade, the more you get into price action, the more you get into what candlesticks do and how they look, you really can see in some 1 minute charts whether it's going up or down with a higher probability than if you waited for that 5 minute to form, right? Next thing must be in your trading plan are your risk management parameters. So we've got a whole section on risk, but that must be in your trading plan, okay? Next, we have your execution parameters: entry trigger, take profit trigger, invalidation. There's more than that. We'll go into them deep again in execution. But that must be in your plan as well. All right, so that is something as simple as an entry trigger. Okay, what's my entry trigger? All right, well, generally, your trigger will be one part of your system, you know, one part of your trading rules. So I gave the example before about the RSI on the 1 hour going below 30 and it being on a Monday or a Tuesday. Let's say that we had that system a little bit more advanced, which you typically would, and it would be a 1 hour RSI, 30, on a Monday or a Tuesday. But also, to go long, which we'd be doing obviously at a 30, to go long we need to see an under-over pattern on the 1 minute chart. Most of you know what an under over is. If you don't worry, we'll cover that in price action. An under over is, just think of it essentially as an inverse head and shoulders, okay? Where you have a low, you then sweep the low, you run below it, and then you claim back above, and then you retest. So that would be your trigger, okay? Because obviously the 30 on the RSI isn't a trigger by itself, because it also has to be on a Monday or a Tuesday. And then being on a Monday or a Tuesday isn't a trigger by itself, because even if it is on a Monday or Tuesday, it also has to do an under over. So the under over is the fundamental final piece of the jigsaw that must be met. And so that's your trigger. All right. So we have to have Monday or Tuesday, we have to have a 30 RSI on the 1 hour. Then when we get the under over is my trigger, enter. So that's an entry trigger. Okay. Of course, take profit trigger and validation. We'll cover those more in depth in the actual section. And finally, for the things you must include in a trading plan, you must include a record of all trades. A few ways of doing this. I use Edge Sheet. I'm actually going to change to Edge Wonk. It's a fucking weird name, but it's a much better platform, apparently, from what I've seen. Edge Sheet is good. You've seen me, if you're following the BTC thread in Hustlers University, you'll have seen me posting a few screenshots of old trades from Edge Sheet. The good thing about it is it shows you exactly where you entered, exactly where you exited, and the time when you did, and there's a line across, and you can see visually how your trade was after the fact. Very, very good for looking back and seeing how close you actually, your entry and your exit were to the top and the bottom, and can help you massively with your next and subsequent trades, because little things like entering too early. This is a common one where let's say it goes down 2 legs. So you're declining. Bitcoin goes down 1 leg, basis for a bit, goes down another leg, basis for a bit, puts in a bit of a bottoming pattern. You go long, and then Bitcoin goes down more, but not too much. It just sweeps out the lows, goes a little lower, basis for a few minutes, and then pumps higher. Eventually goes up and takes out the high, and you get a winning trade. But when you go back and look at that, you'll actually realize that because you get in on that second leg down rather than waiting for the third leg down, you might have ended up getting 30% less out of your trade that you could have got if you had have waited. And in hindsight, you can look and say, was there a reason for me to wait, or was I right to enter? And at that point, you can say, oh no, look, actually the setup was correct. I'm glad I took it. Mightn't have got the max out of it, but it was the correct setup. Great. Or you might look at it and say, well, actually, looking at this in hindsight, with not in the moment, not with any stress on me, it wasn't really. I kind of forced that trade. I got into it a bit early, and I did get away with it. I had a winner, but it wasn't a great trade. Next time, I would wait for a third leg down. Very, very important. That's just one example of hundreds I could give about the value of recording your trades and reviewing them. All right, so that's your trading plan. That's it. Doesn't have to have more than that. There is much more you can put in one if you want. I recommend you don't, because there's already more than enough there. You want to always have your high level, trading goals for the month, quarter, year. Remember, not just financial. And if it's financial, not dollar-based, must be percentage-based. Growth, percentage or R, if you prefer to speak in R, traders do tend to. R is just, 1 R is your risk. When you're talking about risk reward, 1 R stands for like the risk I'm taking is 1 and the reward I get is 3. That's it. For me personally, I always equate 1 R to 1%. So if I've got a portfolio that I'm scalping with, 1% is 1 R. I just do that for ease of, easy use. So then when it talks about profit, if I make 10 R, it's essentially I just made 10%. So whether you're talking hours, talking percentages, doesn't really matter. The big thing is just don't talk in dollars. Set your rules for your system. Again, super simple. Pick the asset that you're going to trade, or assets. It's fine to have more than one. I generally say, though, when you're learning, focus on just one. Time frames. Pick the time frames you trade on. Stick to them. Risk risk management parameters. Very simple, but not easy. Okay, simple because it's 2 plus 2 equals 4 kind of stuff. It's very, very simple, but when you get emotions involved, a lot of people fuck that up. So we'll cover that in depth.